This channel is for educational purposes only. Make sure you do your own due diligence before making any investments. And there is inherent risk in trading, so it's speculative. Just make sure you keep that in mind.
Hi, this is Joe Rabil with Invest Like a Pro. We're going to talk about the S&P and the QQQ today. I want to give an update on the overall market conditions. We're going to see where we stand. So let's get straight into the conditions right now. And I've got these all marked off on the left. A few changes took place with respect to the trend. I'll get into that in a minute. We still have high volatility conditions because based on this line on the right, the average true range is still above its moving average. And so we are in a more volatile market condition, which makes sense based on all the movement that we've had. And I would put that in the back of my mind and realize that it's not optimum. It doesn't necessarily mean the market's got to get killed or anything, but you're not in optimum conditions, especially if you want to do like swing trading type investing. If you're looking at bigger picture type things, longer term, I don't think it's as big of an issue. But when volatility is rising like this and we get this ADX moving to the upside, you get more flagrant volatility in the short term, some gaps and that type of thing. And it makes it a little tougher to trade using like a daily and hourly type of a combo. So you just want to be aware of that. When, if I go back, these periods where the ATR, the average true range, is dropping like this below its moving average, these are really ideal for shorter term type trading times. So just want to kind of keep that in mind. Again, it's not an end-all be-all indicator, but it is a good thing to keep an eye out for, and it especially helps you understand what time frames are probably working. So you just want to keep that, again, in the back of your mind. So overbought, oversold is at 66. We tried to drop down. It got down into the mid to low 40s, and then we've gotten a really good retracement. So basically this 50% mark, it looks like it's holding. I think that's a really good sign. When we get into the trend, we can talk about that a little bit more. The most encouraging thing that I saw, and one thing that I mentioned last week, is what I was hoping for is a drop in the sentiment. I was kind of hoping we get into the high 20s, but we did reach 30%. Even though the markets rallied up, all the volatility is increasing the number of bears, and the number of bulls are dropping. And so that overall sentiment number has dropped from pretty much, I think the peak was around 48. So it's dropped down to 30. So I would view that very bullishly. The fact that this is pulled back, especially based on what's taking place from a trend standpoint. So let's go ahead and look at the market with the trends. So the first thing I wanted to mention is that in fact, I want to zero in on the monthly chart because, we're overbought. And I keep bringing this up that we've gotten stretched away from the 18-month moving average. But what we haven't been able to do since this low, so we made this, well, let's start here. We made a nice move to the upside, and then we had this kind of outside bar where you took out the low of this bar, but you also took out the high of that bar. So it was outside the range of the prior bar. And then it closed really well. It closed off the lows. And then we made a higher bottom, right? And that it was actually an inside bar because we were inside the range of this bar. So we went from an outside bar to an inside bar. But we did make a higher bottom, and then the next bar was a good green bar with a higher bottom, and then we made another higher bottom, and then another higher bottom, and we just made and we're in the process actually of making another higher bottom. So I think we have to respect this monthly chart on the S&P until it can take out its prior bar's low on the monthly chart. I think if we do that, maybe we'll actually get a little bit more of a retracement. Now, when we look at the Qs, you'll see that we did do that. But I think you kind of want to see this take place in more than one index. If one index does it and the other one doesn't, you get these divergences where in this particular environment, it seems like the bias is just to the upside. And as I've said all along, I think the bias is to the upside. I was looking for maybe a little bit better dip, but you have to know your bias, as I've said. And I think with this 18 and 40 rising, the bias was to the upside. The question was, for me, as we get into the weekly, where we're going to get a little bit better dip. And what I said last week is we wanted to see the reaction at this 3,700 area. I don't really like to make predictions. I like to see how we react. Now, the only way to really do that is to go down on a small time frame to see the reaction. I'll show you that on the hourly chart. It's much more evident on a QQQ, but I can still show it to you on the S&P. So when I tell you that I think we need to see how it reacts, I'm going to show you what that means to me. So when I look at this, I have actually changed last week. I changed the momentum on this time frame, on the weekly time frame, to neutral. Mainly, the ADX is still in a pretty strong position, but DI did cross down below 25, so not quite as strong. And we do have MACD below the signal line. So even though price is moving back up, we don't have MACD confirming quite yet. It's not back above its signal line. Now, maybe that'll happen, but we want to be aware of this because we could be setting up our first layer of divergence in this move. If we make a new high, go up to 4,000, and this doesn't confirm, it would be a sign that we'd want to be on the lookout for. The one thing I would tell you, though, is look at how the 18 and the 40 are moving up in almost a parallel fashion. And as I've said in the past, that's usually a pretty good sign. The reaction off of 3,700, I think, is a really good sign. So right now, again, unless we take out 3,700, I think your bias needs to be to the upside. I think if we end up coming down and taking out 3,700, that would be very meaningful right now. If we ended up breaking that, I think we'd end up going through probably a pretty meaningful correction phase. So let's just look at the daily chart. And what I mentioned last time, I actually had drawn in a trend line based on the fact that we had turned things to the downside. But I want to make sure you realize that we did come down and test this area 3,700. That was basically the first target level. And I'm going to show you on the hourly what took place and why I would consider this break of this trend line to be pretty meaningful back to the upside. The one thing I would tell you for sure is that we made a zero line reversal. And so, even though the ADX continues to be really sloppy, MACD has worked its way back down to the neutral level and now crossed back above its signal line after testing the zero line. So I'd view that as a bullish condition. On the hourly chart, if I go and zero in on this, so we had this declining move away. And what I said was I want to see how it reacts. And what I mean by that is, so we're coming down into this zone down here. Let me do this again. We're coming down into this zone of support. And I do consider it as an area. It's not an exact level. I don't look at exact price points. It's just a zone. And we came down into that zone. I want to see. So what happened was it came down and tested, and we got a really big reversal bar. And then we rallied up. And when we came back down, we just tested this area. We didn't go to a new low. So if we would have ended up coming down and going to a new low here, and then maybe rallying up like that, something along those lines, that would be really negative. That would be the reaction that I would say would be an incredible negative sign that we're probably going lower. And what ended up happening is, it came down, tested, rallied off it, and successfully held. You had a tested low, and then it had two huge green bars to the upside right off the bottom. So once you start to see that, I think you have to think that there's a lot of respect for this support area down. Again, it's a ballpark of around 3,700. And then if you notice what happened, we came, and you do this on the smaller time frame so you can see what's happening. So we came down and we broke the downtrend line, and then we rallied up, and then we came back and tested the 18, which was now rising on the hourly. And then when it turned back up through here was kind of the completion of the 1, 2, 3. But, even having the fact that we tested this and once we started to gap up, you had to sort of assume that the bias on this time frame is now to the upside. So let's go back and look at the 4 time frames again. Now, I'm going to clear out all this. So I would put the daily time frame more at neutral because the 18 and the 40 are basically flat right now. If the 18 starts to cup around, and we get any kind of a pullback, if this starts to consolidate or pull back a little bit, then you'd have to consider that to be probably a buying opportunity on this time frame. We successfully held support and the 18 on the weekly. Let's go to the QQQ. So I mentioned that we actually took out this prior bar. Let's go and look at this on the monthly chart. So we took out this prior bar's low and even this next bar, and I think even the low here. But notice we talked about the 300 area and how important it was. And so at this point, we want to look at how we react there. Yeah, we kind of overran on the weekly. We did get through the 18 week a little bit, but it's still rising, and so's the 40, and they're rising at about the same rate. MACD is divergent here, so we're not really in that strong of a position on a momentum standpoint. But again, based on the moving averages, we're okay. On a daily chart, we've rallied to a pretty critical level right now. We have rallied up to the 18, which is now below the 40. So the question here is, are we getting an opposing trend trigger so if you look at the weekly chart, we've pulled back into the zone, but the trend is up. In this one, we have an opposing trend potentially. And if we did some type of a pattern where we came down here and then turned back up, then I think you'd have to consider that an opposing trend trigger back to the long side for the weekly trend, weekly, daily. And I'm keeping my mind open. I don't have any strong opinions one way or another. The one thing that's bothering me more than anything is this ADX condition. This is a very strong selling. And I think I'm sort of the opinion that even if this thing does work its way back up through the 40, that we've got resistance up here, and that I wouldn't be surprised if we end up forming some kind of a trading range for now. Because of how violent this selling was here, we're going to need an equal amount, an aggressive amount of buying back to the upside to really turn this back to the positive side, in my opinion. So it's just something to keep in mind. I'm kind of more neutral on the QQQ, although in the short term we might see a little bit more upside in it. I want to take you to the, let's go to the hourly chart, because again, if we look at what I was describing about how we reacted, this one really stood out because we came down, we broke the downtrend line, rallied up, and then came down and tested the low. I mean, that's a 1-2 for sure. And then off the low, we gapped. And if you notice, we made basically a double bottom in price, but the MACD made a significantly higher low. And so did the ADX, made a significantly lower low. So pretty good sign that we were making they were basically defending 300. Now, it doesn't mean that we can't come here, draw on a trend line and see, a trend line break. And, for all I know, coming up, we're going to come back down, break this, and form some type of a sell signal. I don't make predictions. I like to trade off the signals, and we know where our key levels are. 324 is resistance. We've got really powerful support at 300. If we get a signal here that could lead to another decline down towards 300, I think you want to play it. Especially based on what's taking place on the daily chart. We don't have enough strength on the daily right now to be overly bullish on this. I think we could end up turning to neutral, but right now, if we fail at the 18, I would be on the lookout for another sell on the hourly chart. So that's my update for the week. You guys have a great weekend, and we'll see you next time.